Welcome to IQD Dinar News, your go-to source for the latest updates on currency exchange rates, revaluation news, and insights into the Iraqi dinar. Stay informed and ahead of the curve with our timely analysis and breaking developments. The exchange rate between the US dollar, USD, and the Iraqi dinar, IQD, is an important economic indicator in Iraq, affecting everything from international trade and government financial planning to the everyday lives of Iraqis who rely on imported goods. In the paragraph, it is reported that the USD closed at a lower rate than it opened earlier in the day. This occurred in two major cities: Baghdad, the capital of Iraq, and Erbil, the capital of the Kurdistan region. These cities are critical financial hubs for Iraq, each reflecting a slightly different economic environment due to both geographical and political reasons. The USD exchange rate in Baghdad, specifically in the Al-Kifar and Al-Harithiyya central exchanges, is noted to have closed at 151,500 IQD for every 100 US dollars. This is a decline of 100 IQD from the rate recorded earlier in the day, meaning that the value of the dinar increased slightly during the day, at least in relative terms to the US dollar. This type of change, although small, can reflect underlying dynamics such as market sentiment, government intervention, or fluctuations in foreign currency reserves. The mention of parallel markets in Baghdad refers to informal or secondary market systems that exist outside the official banking sector. In many countries, especially those with volatile or weak currencies, parallel markets emerge as a way to circumvent regulations or to engage in currency transactions more freely, often with less oversight. These markets can sometimes reflect more accurately the supply and demand dynamics in the economy, as they are more flexible and reactive to short-term pressures. The fact that the buying rate is lower than the selling rate is standard, as currency traders and money exchange businesses aim to make a profit from facilitating these transactions. In the case of Erbil, the exchange rates were slightly different, with the selling rate at 151,500 IQD and the buying rate at 151,400 IQD for every used 100. And local government policies. A critical point to consider in interpreting these figures is that Iraq, like many other countries with relatively weak or unstable currencies, relies heavily on the US dollar for both domestic and international transactions. The Iraqi economy has been severely impacted by decades of conflict, including the US invasion in 2003, subsequent insurgencies, and the fight against ISIS. Additionally, Iraq's economy is deeply tied to oil exports, which are priced and traded globally in US dollars. Consequently, any fluctuation in the exchange rate between the IQD and the USD can have broad ripple effects throughout the economy. When the dinar depreciates against the dollar, as it did in 2020 when the Central Bank of Iraq devalued the currency by approximately 20%, it can lead to higher import prices, contributing to inflation. Inflationary pressures in Iraq can quickly exacerbate existing socio-economic problems, as the country has already faced significant challenges in rebuilding its infrastructure and stabilizing its economy post-conflict. In this context, the fluctuations in the exchange rate as reported in the paragraph could be a reflection of several key factors, including the actions of the Central Bank of Iraq, global economic conditions, and Iraq's internal financial health. The Central Bank of Iraq plays a pivotal role in managing the exchange rate by intervening in the foreign exchange markets. This is typically done by buying or selling US dollars to stabilize the dinar's value. For instance, if the central bank wants to strengthen the dinar, it might sell USD from its reserves and buy IQD, reducing the supply of IQD in circulation. thereby increasing its value. Alternatively, external factors such as global oil prices can significantly affect the dinar's value. Iraq's economy is heavily dependent on oil revenues, which account for a large portion of the government's budget. When oil prices are high, Iraq benefits from increased revenue in US dollars, which can help to stabilize the dinar or even lead to its appreciation. Conversely, when oil prices fall, Iraq may face budget deficits and a reduction in its foreign exchange reserves, leading to downward pressure on the dinar. The exchange rate in Baghdad's markets may also reflect broader economic concerns such as political instability or uncertainty. Iraq has faced several waves of political unrest in recent years, including protests against corruption, unemployment, and inadequate public services. Political instability often leads to economic uncertainty, as businesses and investors become more cautious about their decisions. In such an environment, demand for the US dollar can rise, as both individuals and businesses seek the relative safety of the US dollar in times of uncertainty, further contributing to a depreciation of the local currency. On the other hand, the exchange rate in Erbil presents a slightly different picture. The Kurdistan region of Iraq operates with a degree of autonomy, and its economic conditions are somewhat distinct from those in the rest of Iraq. Erbil, being a hub for international oil companies and other businesses operating in the region, might experience a different set of demand and supply pressures for foreign currency. Additionally, the Kurdistan Regional Government, KRG, has its own budget and financial policies, which can lead to slight differences in the exchange rate compared to Baghdad. Moreover, the security situation in Erbil has generally been more stable than in other parts of Iraq, contributing to a more consistent economic environment, which could explain the relatively tighter spread between the buying and selling rates in Erbil's currency markets. Another factor influencing these exchange rates could be the levels of foreign investment and remittances. Iraq receives a significant amount of remittances from Iraqis living abroad, particularly in countries like the United States, Europe, and the Gulf states. These remittances often come in the form of US dollars, and fluctuations in the exchange rate can affect how much dinar the recipients get when converting dollars. An increase in remittances could lead to a temporary strengthening of the dinar as the supply of US dollars in the market rises. Furthermore, the movement of the exchange rate throughout the day can be indicative of short-term market behavior, such as speculative activity or reactions to news events. Closing 100 IQD lower than its opening rate against the USD could suggest a positive development or market sentiment that led to increased demand for the dinar. The exchange rate dynamics in Iraq are also impacted by broader global factors. The US dollar itself fluctuates in value relative to other major currencies like the euro, yen, and pound sterling. These fluctuations can have a knock-on effect on the dinar, especially as Iraq's economy is deeply intertwined with the global oil market. If the US dollar strengthens globally, it could lead to a weakening of the dinar as more IQD are required to purchase the same amount of USD. Conversely, a weakening US dollar could make the dinar stronger, assuming all other factors remain constant. Given the central role of the US dollar in Iraq's economy, any movement in its exchange rate has profound implications for various sectors. Businesses that rely on importing goods from abroad, such as retailers and manufacturers, are particularly sensitive to changes in the exchange rate. A weaker dinar means they have to pay more in IQD to buy the same amount of goods, which could lead to higher prices for consumers. For ordinary Iraqis, this can translate to reduced purchasing power, as their salaries and savings in dinars do not stretch as far as they once did. In addition to its impact on imports, the exchange rate can also affect the competitiveness of Iraqi exports. While Iraq is primarily known for exporting oil, other industries, such as agriculture and handicrafts, could benefit from a weaker dinar. A weaker currency makes Iraq's exports cheaper and more attractive to foreign buyers, potentially boosting demand for non-oil products. However, this positive effect is somewhat limited in Iraq's case, given the dominance of the oil sector in the country's export profile. In conclusion, the report of the US dollar closing at a lower rate than Baghdad and Erbil reflects the complex interplay of local market dynamics, government policies, global economic conditions, and the unique challenges faced by Iraq's economy. Thanks for tuning in to IQD Dinar News. Don't forget to like, share, and subscribe. For more updates on the Iraqi dinar and global currency trends, hit the notification bell so you never miss an update. See you in the next video.